So if you are in a set, if your buyer is buying in a, I'm going to put this community group, and you get an updated resale certificate because the resale certificates, the time frames are within. Does the 3-day right to cancel apply to the updated resale certificate and the information contained in it? Yes. Good question, isn't it? Yeah.
And it's okay if you don't have to answer it. Not because you have to go
Devil's like reading. The devil's in the details, guys. The devil's in the details. Yeah.
So what's the
one
answer?
would think.
What's the answer? I'd say, yeah, you're right.
One would think, yeah, because things change. Well, interestingly, the state code is silent on it. It doesn't say that you have an additional 3 days, and your contract says, and I quote paragraph 14. An update which says that a request is updated. The certificate does not extend the time frame set forth in this paragraph. It says that in the contract. So I'm thinking that you get the original resale certificate. They update in the update any information that's changed, but you are still forging ahead and buying it. Whether it doesn't matter what it says. Now, can you change that? Can you say we want an additional 3 days to cancel this transaction? That's an agreement between the parties. I think you could do that if you wanted to, because you don't know what's going to show up in that updated resale. There may be so the board may have voted on a special assessment that you know nothing about, that was not mentioned in the first one. And as crazy as that may seem, I've seen that happen before. So it may be that if you are ever in a situation where your buyer wants an updated, or you think it's appropriate to obtain an updated resale cert for your client buyer, that you might say, hey, we would like to have either the same 3 days, or just give us 24 hours to review it and kind of digest what it says, so that you're not stuck.
But if you don't put it in there, you don't get it because it's not in there.
And it's not a state code.
Fine. So you can
Anyway.
also write that into your fur check. That's what you're saying.
Yeah, you could write a contract. You can say, we want to resell if we're going to want an update, and we would like the same 3 days, or we would like it 24 hours, or whatever. And the other party, the listing agent, may say, well, why do you want to do that? You can say, well, because our contract says that we don't get the same 3 days that we get when we get the resale certificate. So we would like to at least have a little bit of time to review what's in there. It's not fair to the buyer to just dump this out. And guys, I always tell my agents, I don't make this stuff up in the shower in the morning before I come over. This is a call I got last week, and I had to do research on it. I didn't know the answer. My gut was, you get the same 3 days. And it makes sense. But
You'd be surprised how often it will log your gut.
yeah, so.
You might be wrong.
Anyway, all right, so you want to do assumptions.
Are you doing assumptions or mine?
Well, I'll just make a couple of comments, and you can go through the bullets, and I'll jump in. Assumptions. So I asked my paralegal this morning. I said, if they, because I close all my loans, as you know, people that close with me, and I think I've only probably done 4, maybe 5 in the last 6 months, if that. And then my paralegal confirmed that, and we have some bullet points. We're going to make some comments on it. Most of the comments are not about the guts of an assumption. In other words, how an assumption works, because I think most of you understand that. Most of the comments are administrative comments about the quirks that these lenders have that prevent something from a transaction from proceeding as smoothly as you'd like. For example, most lenders will not allow DocuSign. They will not allow e-sign on any of their assumption documents. So you can't take it easy. You have to have, if the clients are going to be in the room, you've got to set up a remote notary, which adds time and expense to the transaction. Most of our, I think we had one penny Mac, but almost all of our assumptions to date have been with Freedom Mortgage. They have bought a ton of government paper, VA, FHA, and of course, VAs are the most popular because they are fully assumable with credit qualification. So, and that's something that is kind of sold, and it's, I mentioned it at all my closings because it is a benefit for veterans. So anyway, I just wanted to mention that it's not so much how an assumption works. It's what we have to do from an attorney closing standpoint to get to the solvent treatment. Okay.
I think the big takeaway is kind of like John was saying, a lot of the requirements that the lenders put in place for the process just elongates the process. So if you're working with buyers and sellers that think, oh, this is just going to be a normal transaction, we'll close in 30 days, probably not going to happen. You're looking much closer to 60 days. Obviously we move everything as quickly as we can. I'm sure whatever selling company you work with is going to do what they can to expedite the process. But just for practical purposes, it takes longer. So when you're writing contracts and it's an assumption, make sure you're accounting for that additional time.
Yeah, in that respect, I would say 60 days. My paralegal said, our paralegals, said, 60 plus days. So what I would do, because it's a pain in the neck to circulate, even though you can DocuSign and Dotloop and all that stuff, it's a pain to have to create and circulate addenda, constantly kicking out the dates. I put 90 days. I would put a 90-day and then say, notwithstanding that, the parties all agree that we will close within 5 business days of assumption of product. And that way, if it gets done in 47 days, then you close sooner. But that way, you've got that end date out there, and it gives you some wiggle room. And you don't have to constantly say, hey, John, should we kick this out another 10 days or another 20 days?
And you're constantly having to do addenda after addenda after addenda.
And it just gets sloppy. So you might want to do something like that. That way you take care of it at the outset. You're kind of done.
So another question that comes up a lot with assumptions is related to the escrow. But who gets to keep the escrow money? Does the seller get paid for the escrow? Is it the funds held in the escrow accounts? Or, does it pass to the buyers? Well, there's a provision in the contract, and it's one of those nice little clicky boxes that they give you that says that it either that the buyer is going to purchase it for consideration or that it's going to pass gratis. Well, what we found throughout the closing process is most of the lenders, even if you check that the buyer is going to be purchasing the amounts held in the escrow for property tax, minimum insurance, even if you check that box, most of the lenders aren't going to allow that anyway. It, generally speaking, is going to pass gratis no matter what the contract says. So just keep that in mind when you're completing those contracts.
Yeah. So when you're speaking to your sellers, they're going to get an assumption statement, and it's going to show current escrow balance $3,790. Now, if you prorate, the buyer has to buy that from you, and that's a chunk of change for the seller. But the lenders, as Molly said, I don't know if they don't understand it. I don't know what it is. They simply will not allow prorations. It's pass gratis. All that money goes to the buyer at no cost at no cost to the buyer, which means the seller loses all the benefit of that, and the lenders do not care. We have tried 100 times explaining to Freedom what pass prorate means, and that the seller expects to be reimbursed for what he's paid in that's not been used. They say simply, too bad, not happening. So don't sell it to the seller, because they're probably, if they get it, great, but chances are they're not going to get it.
So another thing, particularly because so many of the assumptions are government-backed loans, and most of the ones that I've seen are VA loans. You guys have all been there. A lot of the VA closings we do are signed by power of attorney because, the veteran, their active duty might not be local, or they've already been reassigned and have moved. Again, a lot of the lenders in these assumptions will not allow the parties to sign by power of attorney. It has to be actually signed by the seller, by the buyer. So that's just another piece that needs to be taken into consideration for practical purposes, knowing, don't just go for, oh yeah, no, you can just sign by power of attorney, it's fine. They may actually not be able to sign by power of attorney. Of course, this is another one of those things we always try and talk the lenders into, but as you know, even whatever they want is when it's going to happen. So just make sure you set those realistic expectations.
And in that regard, another interesting point, and I don't know why they do it, but all assumption documents and documents related to the assumption package from a lender standpoint can only be signed by the parties on the date of settlement. So you can't set up a remote notary for the seller 3 days before closing to get it done and then get the documents back. If the lender sees a date, a document's been signed even 1 day before the assumption package, ixnay, you're done. They will not allow you. That's start over. So keep that in mind. And that becomes important because, one of the documents that is created by the lender is the assumption statement, the assumption document that says, where the buyer says that they agree to assume and be responsible for and all of that. The lender creates that document and will not give us a copy of it until the date of settlement. We get it emailed to us like 10 minutes before settlement. What does that mean? That means that we have to take that into account when we're setting up the mobile notary, because that document has to be in the seller's package to be signed on the date of settlement, or the lender will not accept it. So it's
and again, it can't be signed by the arbiter.
Right. It's just problematic making sure that everything gets to the seller on the same at the same time before settlement, but on the day of settlement. And then the lender will not fund the transaction until they see our entire package that we have got signed at settlement. We have to email a package back to them to show that every date is the date of settlement. Any document that's been signed prior to that is rejected, and the assumption package is rejected.
And so a lot of these reasons, for practical purposes, it does make it really helpful to have both sides of the transaction in the same office and to meet with both buyer and seller, because there is so much back and forth. Obviously, they're not required to agree to that, but just, again, for practical purposes, that tends to help streamline the process so that we're not constantly bouncing back and forth. And how back and forth it is on a normal transaction is that much more, with.
So I have a question. If you have a remote, like a seller that lives out in the area, normally don't you want the seller's package in before the buyer signs?
So it's not uncommon to have it the same day, even with a standard transaction. Ideally, we'd like it in advance, but for practical purposes, if
the seller has to sign the same day as the buyer, then they're not sending the package back until the next day.
So we would provide them, at least the way our office handles it, along with the package we send them is an overnight FedEx label, so that they can immediately put it in. And if it is a remote notary, typically we schedule a remote notary. They're the one that has it. They're the one that puts it in the mail. We give them the instructions on how we need it. And with regard to getting it the next day, that's kind of one of the other, kinks with doing an assumption is in Virginia Beach in particular, we really haven't had many assumptions, at least not in recent memory. In other cities, just about everything we've done for assumptions is for anything. Virginia Beach will not e-record an assumption. We have to go and old school, go to the courthouse and physically record the assumption. So it doesn't get recorded, the day of, before the day after, maybe a day or two later, which, okay, big deal, except that means we can't disperse until we report. So it may push the disbursement back a couple of days for the seller. So
if you think that's the point I was going to make. If you think about it, guys, if the lender will not allow any e-signing, that means everybody has to sign the documents, including the lender. The lender will not sign the assumption agreement until everybody else has signed it, and Freedom will not sign a counter signature. In other words, they won't sign a form they've got, knowing that the other 4 or 5 signatures that they need are on the form that we have. So we have to take the assumption agreement that we get signed, overnight it to the lender. The lender then signs it the next day, sends it back to us the day after, and then we're ready to record and disperse. So when you're talking to your sellers, practically speaking, tell them that it may be 2 or 3, maybe even 4 days. We just did one. It took us 5 days to get everything back so that we could record it, so that we could disperse, including commissions, including everything. And the seller was furious. The attorney for the seller was furious. I don't know what to tell you. That's just the way it is. And I don't know why they are making it so difficult. It's just the way it is. It would seem to me they'd want this kind of process on a new loan transaction. I don't know what the big deal is with an assumption, but They are just very picky. They don't let anything slide. And it's just the way it is. Just the way it is.
Yeah, and we're not bringing all this up to, scare you into talking your clients out of doing assumptions. If that is the best option for them and it works out, great. We just, setting realistic expectations from day one is going to help the whole process go more smoothly because they'll know, all right, this is going to be a process. This doesn't happen overnight. There are a lot of hoops to jump through, but if you want that 2.75%, you'll jump, but you also need to be willing to work with people and you've got to be patient.
And just so you know, just before I forget, AJ, the reason that the Virginia Beach, and we haven't actually had really, as Molly said, any experience, I don't think any other city just yet on assumptions. The reason they will not allow e-filing is because their computer, so when you, the way you calculate grantor's tax on an assumption is the difference between the sales price and the outstanding balance of the loan assumed. So it's based on the equity. So if there's $50,000 in equity, your grantor's tax is $50. It doesn't matter that the sales price was $890,000 and the grantor's tax would typically be $890. It's only $50. The Virginia Beach clerk computer it has not been programmed to create grantor's taxes for assumptions. So what happens is we were sending our package down to be e-filed, and we have the grantor's tax based on the equity, and we get down there and they kept rejecting it. We're saying, why are you rejecting it? They said, because our computer's kicking out a receipt saying we need $890 for the grantor's tax. So we said, well, we're not going to pay you $890 because state code says grantor's tax is figured on the equity on an assumption. So they said, well, from now on, then you're just going to have to bring it down, hand it over. We'll have to handwrite a receipt to you because we can't recalculate our computer just for this one glitch. So that's why that happens. There is a reason for it. Sir.
No, sorry, going in late. I had some loud work. I missed what you had said at the beginning. I'm assuming you said at the beginning. How long is it taking to do assumptions right here now? Did you reach? I did one about a year ago. Damn it. Oh my gosh, the almost 90 days.
Yeah, 60 to 90 days. Yes.
Yeah. I was thinking it's just because maybe they didn't have a clue what was going on.
No, it's just, I don't know why it takes so long. Nobody knows why.
About 4 or 5 years ago, I did one that was like, probably about 45, 60 days.
Yeah. Now, 60 to 90, I think, is probably the same bet.
So the point you're making is the lenders really don't want to do this, and they're making it extremely hard. We just need to be prepared.
It's a practical matter. Think about it. The rates are at 6 and 7%, and they've got a 2.75. Who wants that? That's a non-performing asset as far as I'm concerned.
Right.
So they make it as difficult as possible, but federal law says they have to do it. And it's a benefit to the veteran because they have a broader market that they can appeal to on an assumption. So there's no way around it. They just make it as distasteful as they can, honestly. And it is not uncommon for us to have a package out there waiting for a payment on basically we haven't closed yet. The lender's got it and they are waiting to approve the assumption by the buyer, and 65, 70 days into the process, we get a letter from the lender that says, sorry, your client does not qualify for this assumption. Have a nice day. And they don't give you a ring, but then you call them and you say, well, what the problem was? We can't tell you. So you're done. You're just done. And I interpret that as it was a 2.25% loan. They just didn't want that on their books. So it's done. We want to pay it off. And there's nothing you can do about it. I mean, who wants to pay an attorney $20,000 to bring a lawsuit to find out why they just got, when their buyer got rejected? It's not going to hit.
Yeah, that's what I was going to ask. For a V loan, did you say it was a federal law that they're suing about?
Yeah.
Okay. So every mortgage company has to allow mortgage.
Oh, yeah. It's on every
VA rider.
Yeah.
Oh, that's like a big chunk of that VA rider that they signed and then you trust. It explains it.
Yeah. Yeah, they cannot get around it.
Okay.
The only way the lender can get around it is simply to say, you don't qualify.
Right.
So having said all of that, And everybody always said, you're always the bearer of bad news. I mean, it's not the bearer of bad news. It's just the reality about the circumstances. So, the long and the short of it is the big takeaway is prepare your folks. It's going to be probably 60 to 90 days. Prepare them that it might be jumping through some hoops to get documents signed. Prepare the seller that they're not going to get, probably won't be next day dispersing it, maybe 2 or 3 or even 4 days after. And prepare the seller to tell them that anything that's in escrow, even though they think they're going to get it back, 99% chance they will not get that back. They'll lose the benefit of that. We talked about prorations. Proration, you have to buy the equity, you have to buy the escrow account.
Right.
Well, lenders on assumptions, they will not allow prorations. They do everything past gratis. And we don't know why. So, if it's in the contract, they require that it pass gratis. So, anyway. Any questions?
So fundamentally, when you're sitting at the loan table, closing table, and the loan says this loan is assumable or is not assumable, and you're with that buyer years later, and they want to possibly offer an assumption, you go back to the loan document. It says it is or it isn't.
The VA always says it.
VA says it always is. Again, okay, so conventional, then you have to read the document and then take it from there.
Conventionals are never. In VA, FHA, they are always.
No, FHS. 203Ks and stuff are not.
The 203K, probably not. I'm not sure. We haven't done an FHA as an assumption in 25 years.
Yeah, I would have FHA assumption.
But they are assumable, and that's they have language in the note and the deed of trust that says this loan may be assumed upon qualification by your buyer. So
VHDA, FHA is definitely not.
VHDA is if your buyer meets the same requirements, then they can assume a VHDA loan. They have to be a first-time home buyer to meet the income requirements. If there is a plus component to the loan, the plus component cannot be assumed. That has to be paid off. You can only assume on a VHDA the first mortgage. But generally, I don't think we've ever done one. We would do was like a VA VHDA is what we would be dealing with, as opposed to just a straight VHDA loan. Okay. Yeah.
Questions on that super fun topic? I think a lot of us talk about assumptions all the time, and we usually avoid it because it is just one of those,
Yeah, and it's just
something we really do so few.
Yeah,
but
and as I said at the beginning, there's no magic about assumption law. It's the administrative process of getting to the settlement table. That's really the bundle.
I have a question, which is more of a lender question, but for the equity, do you see any buyers getting like a second mortgage for that, or do they all have the cash?
We've always done. They all have the cash now. I don't know if they're getting a loan, a gift from their parents,
right?
Whether they're pulling from a credit line. You just tell them what cash they need at closing, and we got to wire certified funds.
Because I know, like, my mom always talked about back in the 80s how like they were doing wrap loans all the time.
Yeah,
and I just didn't know if lenders were starting to let people borrow that amount because of
it's a good question. I gotta believe. I mean, if I were a lender.
Mm-hmm.
And I was qualifying as person to make the payment, I wouldn't allow them to get a loan for the down payment. I'd want them to pay it up front to prove that they had skin in the game, and have some assets that you can fall back on if there's a default.
Yeah.
I would want this person to come in and assume a 2%, 2.5% loan with no cash.